Hi, I'm Emily, and today I want to talk about a company most people don't really think about, even though it quietly runs some of the largest organizations in the world. When you hear the name Workday, don't imagine a flashy tech brand or a hyped AI startup. Think instead about the systems that keep companies functioning day after day. Workday sits at the center of how organizations manage both their people and their money, from hiring and payroll to financial planning and reporting. Especially in companies with thousands of employees, Workday isn't just another software tool in the background, it's part of the company's operating system. And once those processes are built around it, leaving becomes incredibly difficult because switching would mean re-engineering how the entire organization works. What really makes Workday powerful isn't just what it does, but how its business model works. This is a subscription company, which means customers don't pay once and walk away, they stay for years. Around 97% of revenue is retained annually, which tells you how deeply embedded the platform is. On top of that, Workday is sitting on roughly $26 billion in subscription backlog, growing at a healthy pace. This creates a situation where future revenue is already visible long before it's reported, giving the company an unusually high level of predictability. When people hear AI, they often think experiments or promises. With Workday, AI is already showing up in revenue. AI-powered products are contributing directly to recurring revenue growth, adding roughly 1.5 percentage points to ARR growth. Today, the majority of new customers include at least one AI-driven module, and a significant portion of existing customers are expanding their contracts specifically because of AI functionality. This tells us AI isn't a side feature, it's becoming part of how Workday grows its core business. The reason this AI strategy works comes down to data quality. Workday has spent years collecting structured, permissioned, enterprise-grade HR and financial data. This gives its AI context that most AI-native startups simply don't have. Instead of generic outputs, Workday's AI operates inside real workflows like workforce planning, compensation modeling, and financial forecasting. That makes the platform harder to replace and significantly raises the barrier for competitors. One of the more underappreciated shifts at Workday is its move beyond traditional white-collar use cases. With solutions like conversational hiring and frontline workforce tools, the company is targeting industries where speed and scale matter more than polished resumes. Retail, logistics, healthcare, and hospitality are all part of this expansion. By simplifying hiring and scheduling through mobile-first and AI-driven workflows, Workday is quietly expanding its total addressable market far beyond what most investors originally assumed. Europe has always been a difficult market for AI-driven enterprise software because of strict data regulations. Workday's response is its EU sovereign cloud, designed to keep customer data entirely within European borders while still allowing advanced AI functionality. This is more than a compliance move. It positions Workday as a trusted long-term partner for European enterprises, governments, and regulated industries, and it opens the door to growth that many US-based competitors struggle to access. Financially, Workday is clearly entering a more mature phase. Annual revenue is now above $9 billion. Subscription revenue continues to grow in the mid-teens, and operating margins are approaching the high 20s. Free cash flow remains strong, which gives the company flexibility. Instead of using that cash only for expansion, Workday is also returning capital to shareholders through an aggressive share buyback program worth roughly $5 billion. This shift signals confidence in the durability of the business model. So what is Workday actually focused on today? The company is investing heavily in AI agents that automate HR and finance workflows, expanding planning and forecasting tools through adaptive planning, and integrating recent acquisitions that strengthen recruiting, learning, and low-code integration capabilities. At the same time, Workday is pushing deeper into medium-sized enterprises through faster deployment tools and partner-led implementations. These projects aren't flashy, but they are designed to increase revenue per customer rather than relying only on new logos. Of course, there are risks. Workday trades at a premium valuation compared to many software peers, and growth has moderated from earlier years. In the short term, technical indicators remain weak, and the stock has underperformed despite solid fundamentals. There is also the risk that enterprise IT spending slows further if macro conditions worsen. This is not a stock that thrives on hype cycles, and it requires patience from investors. Workday is not designed for short-term traders or momentum chasers. It's built for long-term investors who value predictable revenue, high customer retention, and software that becomes more valuable over time. If your investment style favors durability over excitement, Workday fits that profile extremely well. Looking ahead to year-end, outcomes depend less on hype and more on execution. In an optimistic scenario, where AI-driven upselling accelerates, Europe ramps faster than expected, and margins continue to expand, the stock could reasonably trade in the $280 to $300 range. In a base case, assuming steady mid-teen subscription growth, stable margins, and no major macro shock, a year-end price around $250 to $265 looks achievable. In a pessimistic scenario, where enterprise spending slows further and valuation compression continues, the stock could drift back toward the $210 to $225 range. Workday isn't about predicting the next quarter. It's about deciding whether you want to own a company that quietly runs the infrastructure of modern business. Before you go, don't forget to subscribe to the channel if you enjoy this kind of deep, no-hype analysis. Make sure to like the video because it really helps the channel reach more people. And if there's a stock you want me to break down next, just write it in the comments below. I read them all and I use your ideas to shape future videos.